Missing one HMRC date could be like putting your profit on fire. So if you've got a £500,000 turnover business or more, save this video because these are the tax dates you will need to know. In this video, you will get to know all of the tax deadlines that are relevant to your business today, and also the company formulas that you need to put in place to make sure that you never ever miss a tax deadline again and burn profit. Hi, I'm Michael from MDH Accountants. We help business owners like you that turn over between £500,000 and £2 million scale safely and profitably too. Automate these deadlines in your calendar to make sure that you never get another HMRC penalty again. The non-negotiables, and these are going to be every single month. PAYE and NIC payments. If you're making this payment manually, it's the 19th. If you get them to collect it on direct debit, the payment will be collected on the 22nd. Now, what I think is a really good strategy, especially if you've got cash put aside for your PAYE, is put this into a high earning savings account for that period before it comes out. The day before it comes out, set a transfer into your current account so the available funds are in there. Then that way, rather earning 0.00001% interest on that balance, you potentially in the current rate will be getting around 4% interest on that. This interest adds up and it's free money, because if not, you are leaving it in your current account to earn nothing. RTI for payday. So make sure that your RTI has been submitted before you actually release your payroll. The RTI needs to be submitted to HMRC, which is normally done via a payroll software, and before you actually make payments to your team members. So if you're making your payments as we do on the last Friday of every month, you need to make sure that the RTI is done before that to make sure that you are compliant with HMRC. CIS Returns. So we deal with a lot of construction industry clients, so you need to make sure that your CIS return is done very quickly. I think it's easier than ever these days, because a lot of construction owners will have timesheets, or they'll know their day rates that they're actually paying their teams. The CIS returns are due by the 19th of the following month, which is also followed up by the payment. Again, I think it's a great idea to get this payment on direct debit, but make sure that you're getting this done, because if you're missing 1, 2, 3, 4, 5 CIS returns, you're going to get a £100 penalty per return. And that can add up, and it's just a complete massive waste of money. Now, with technology that's around today, especially with bank feeds, if you haven't got the tightest of ledger, which shows how much, which gives you the breakdown of each subcontractor, you can pick this up from the net payments on the bank statement to then gross it back up to make sure your CIS return is done properly. Ideally, if you've got this well in control, it's always better, but as a safety net, you can always pick this up through your bank statement. VAT and payment. VAT returns are normally done on a quarterly basis for the majority of businesses. So if you've got a VAT return that's due on the 31st of December, that's up to the 31st of December, you'll need to make sure that that's filed and also submitted 1 month plus 7 days after that period end. Now, because it's so easy now to pull in information with technology, with bank feeds and also capturing invoices, I don't think you really need this long. Your VAT return should be done a week or two after the month end, then that way you can schedule how much VAT that you'll need. If you're being really clever with your planning, you'll keep a rough running total of what your VAT return is looking like per quarter. If you've got the available funds in there, you put that into a nice little savings account, you earn your 4% interest, and you make sure that's transferred back into your current account the day before your direct debit is then cleared. That way, instead of earning nothing on your current account, you are getting on that short period 4% in interest on that VAT return. It's free money. And it will also prepare you to make sure that the direct debit doesn't bounce. Make sure your VAT return's in, so you never ever fall into the trap of paying unnecessary VAT penalties and also interest. Fixed annual HMRC dates, which are the same every single year. So we've got the 5th of April, this is where the tax year ends. So you need to make sure on your payroll software that the new thresholds that are coming in for the current year, which will be around tax and national insurance, have been updated. And some software, they still do it manually, others you'll get this, make sure that you've pulled in the new data from your software provider. 6th of April, you need to make sure that you refresh your codes for your team members. There may be adjustments where they underpaid tax this year and it's being collected through their PAYE. They may have P11Ds, there could be a whole manner of reasons. So make sure for your team members, you are updating their codes to make sure that you're deducting the right amount of tax for each team member. 31st of May, this is the deadline to submit P60s to all employees. Now, as everything is computerised now, a lot of payroll providers have portals, it's never been easier to get your P60s out to all of your team members. So to get them completed by the 31st of May should be quite an easy process. If it's not, you might want to look at the actual system that you're preparing your payroll on. 6th of July is the deadline for P11Ds. P11Ds in layman's terms are where you give your team members benefits which actually equate to some form of monetary value. So examples of this could be a company car, fuel benefit, it could be health insurance too, to name just a few. So the deadline to complete these P11Ds is on this day, because there'll be Class 1 national insurance that's payable, which is almost the same as employers' national insurance, which the company will need to pay, and the form submitted to HMRC. The 22nd of July is the deadline for when you need to make these Class 1A national insurance payments. If you're making this payment manually, it is the 19th. 31st of October is the deadline if you still file a manual self-assessment. There are some people that will always need to do a manual self-assessment for a variety of different reasons. Sometimes it's just for security. So if you're unable to file an electronic self-assessment, your deadline for this is the 31st of October. 31st of January is your online filing deadline for your self-assessment, and also paying your liability plus any payment on account that's due. So on the 31st of January, this will be your deadline to make sure your self-assessment has gone in and all your tax has been paid. I think this is way too long anyway. I think if you're leaving your tax return to the 31st of January, you're missing the trick. This should be done a lot earlier, so you've identified your tax, so you have no nasty surprises that come to you just a few days before any deadline. And your 31st of July is your second payment on account. When your tax liability is above a certain level, you need to pay your tax in 2 6-monthly instalments. So on the first year that actually comes into effect, it can feel like a really big punch in the face. But when you get used to it and you're into a regular system, paying your tax bill every 6 months can become quite easy. Again, use a savings account to put your money away so you're earning your 4% interest on it, and make sure it's just paid just before the deadline, as it's something you don't want any nasty surprises where you didn't know what your payment on account was going to be on the 31st of July. Now let's get company specific. Company specific is the key dates that you need to understand as your limited company. Your company accounts filing date. Your company accounts need to be filed at Companies House 9 months after your year end. So if you've got a 31st of December year end, the accounts need to be at Companies House by the 30th of September. I believe personally this is more than enough time to do this, as our target is normally 3. Your corporation tax payment. Your corporation tax payment is due 9 months after year end, the same as the accounts filing deadline. You need to make sure that payment has gone on to HMRC and it reconciles to what you've calculated. I always find this one a bit strange, is the actual company tax return deadline is 12 months after the year end, because it always feels strange to me that the payment is 9 but the return is 12 months afterwards. For me, when you're doing the accounts, you want to calculate your corporation tax, you want to file your CT 600 and just get on with it. The other one to bear in mind is your confirmation statement. So your confirmation statement is where you put down your details of your directors, secretary, shareholders, and any movements that happened in a year. This is done annually, and the normal date is on the same month that you form the company. You need to file this 14 days after your confirmation statement date. One thing to bear in mind with this, it's easy to sometimes overlook confirmation statements, and it is one of the biggest reasons why companies get dissolved from Companies House accidentally. Now, if you're late in filing it, there's no penalties, which normally there's a massive myth that there is, but I've seen a lot of companies have their companies just like taken away and closed because they haven't filed their confirmation statement. Please do not fall into this trap. Make this completely foolproof. Have one calendar that you use for all of your tax deadlines, and it'll be great if them tax deadlines are followed up with reminders. And the reminder could be 14 days, 7 days, and 1 day before the tax deadline, just to make sure that you're not missing anything and paying any unnecessary penalties. Have 2 internal owners. So while it's all good to have one person that is absolutely responsible for the overall project, have someone that is also watching their back at the same time. They may be busy, they may get ill, they may be sick, a whole load of reasons. But if you've got someone in your team or is a co-business owner and they are looking after you too, that is a great place to be in. And where possible, pay by direct debit. Direct debit is where you then don't have to make the payment manually and it just comes out. And as I said earlier in the video, if you've got money in the savings account, transfer it to the current account the day before. You can do this way in advance. So you don't need to actually remind yourself the day before. You can say, look, on this date today, which is the 8th, I need to make sure that this is transferred in by the 7th of the following month. So I'll make sure that that transfer goes in on the 6th, so you are maximising the potential interest that you can earn on that money that is sitting within a deposit account. Penalties are profit leaks. It can be difficult enough running your own business in itself and making a profit. So make sure that you haven't got leaks within your business where stuff is slipping through your fingers, because that will give you potentially bad credit, and also it is just completely wasting time and money. please don't fall into that trap. I hope this video's really helped, but if you've got any questions or if you've got any problems currently within your business, let's book a tax chat if you click my link below. My calendar link will allow you to book a Zoom call in my diary, and I'll take on board any questions you've got. I'll get to understand you and your business, and I promise there'll be no pushy sales pitch. I look forward to talking to you today.